Hello everybody. So this video is entitled Mad Green because it is mad green for my stock. This market is brutal to the downside and brutal to the upside. If you think you have a lot of time to buy stocks when they're cheap, you can't know that because the news cycle is so macro driven. A little piece of news, a little opinion piece can make everything go up like crazy or can make everything go down like crazy, especially in the high beta stocks, so-called high beta stocks, right? What I call very undervalued hyper-growth stocks, which is almost exclusively what I cover on the channel. These stocks tend to be correlated at one. They drop together and they go up together. That's why sometimes things like margin or even worse, leverage ETF, those are awful. It can be getting so dangerous, right? Very much dangerous. So is the growth back? Mr. Market seems to think that growth is making a comeback today, when growth is back. And it's so uncanny, like the chart, like across the board, like HIMS, of course, huge position for me. I'm a HIMS faithful, been a faithful since $5. 8.8% up today. At one point, HIMS was up 10% today. Is HIMS still dirt cheap? You bet. It's trading at EV over GP over RG of 0.08. So it's still cheap, but it's not as cheap as it once was. It's not as cheap as when as in March. Rule of 40s will achieve at 48. Look at OSCR. OSCR, similar story. To think this stock went down to the $12 range is unfathomable, considering that it is 8 times and 9 times cheaper than HIMS and Nebius. Like, it's 8 times cheaper. There's no other way to say it. This stock is still way too cheap. OSCR is way too cheap, even at $15. It had no business getting down to 12. And keep in mind, HIMS, OSCR, there's literally no link with the Middle East. Even if you try to make drawer style argument, this leads to this, leads to this, leads to this. How many chains, how many links do you have to make to create a scenario where they are directly impacted? They're absolutely not directly impacted, right? Health is essential. It's defensive. You need it. Anyways, Nebius finally is catching up to the insane contract with Facebook, insane contract with Microsoft, right? They have 40 billion plus of backlog. They happened to sign those in March, and the stock barely reacted when Nebius signed those enormous contract. That 27 billion contract they signed, the market barely reacted. But it seems like it has reacted the past 2 trading days, now at 150. Is Nebius still cheap at 150? You bet. The EV over GP over RG in my spreadsheet is 0.09, and that 600% growth next 12 months is actually conservative, believe it or not. So moving on, you can see the chart is uncanny. It's like all day up. All day green, mad green. Look at these charts; they look the same. And of course, last month was how many back-to-back days did we have? Just slow bleed all day long. The slow bleed. Here, Zeta, same. Zeta didn't have that business getting so cheap. In that sector, in the software sector. In that sector, in general, they're much more expensive than that, even after the crash, right? In general, on EV over GP over RG, in the software sector, I'm going to get a 0.5 in general. There's Zeta and Duolingo that are cheap in that sector. That's about it. Up 7%. The market is all of a sudden realizing, oh, wait a minute. I guess marketing is not impacted too much by the Middle East. This is correlation to 1. And then we go on, right? Cleanspark, 7%. Mara, 8%. On a day where Bitcoin was so-so, frankly. I mean, Bitcoin didn't do too much. It wasn't too crazy. I mean, we're not even back to the level we were on Saturday evening on Bitcoin. But these stocks are up 8% because they traded together. Hyper growth like that trades absolutely together. I'll conclude with SoFi. SoFi, same, up 5%. SoFi had no business falling near $15 like it did. EV over GP over RG is 0.21. SoFi is dirt cheap. SoFi is too cheap. So the market, of course, today is selectively rising some sectors, right? Software, technology, Some problem is NVIDIA is such a behemoth. NVIDIA is hard to move. It's such a behemoth. And of course, Apple is down. Apple is the most expensive Mac 7, period. It's just plenty expensive, and that's kind of a defensive Mac 7. That's why it's down. Healthcare is down. Walmart and Costco is down. Finally, the market breathes a little sense. Finally, because to me, the run of, say, a Walmart, to me, was entirely unwarranted. Old money, old train of thought, old capital flows are still controlling large swaths of the market when we get into macro madness, right? AT&T down, thank goodness, right? Remember March with AT&T, people were buying AT&T, like ignoring SpaceX and Amazon Leo, like entirely ignoring that space mobile phones are a few years away, entirely ignoring it. It made absolutely no sense. So the nonsense continues. It's still a casino. Going up to the upside this much is still a casino. I'm waiting for the markets to settle, right? To settle, and I want to see the companies move on the back of news again. And it seems like the Middle East deadline was extended by another week. I think it's April 27 now is the new deadline. So how many extension are we going to get? Is that Middle East situation gonna take years to resolve? The market's getting used to that, probably quite a bit, getting used to this a little bit. You know, it's like, who knows what's going to happen, but it shouldn't impact our stocks too much, honestly. If at all. It only does because of flows and because of a madness of money flows. But to me, this is a step in the right direction. And if we get a few more days like this and we get a stabilization, the market may actually be getting back to its senses. And that's what I'm hoping is going to happen. Keep in mind, we are overdue for quite a few more mad green days like this. Keep that in mind. So anyways, this was not investment advice. This is not financial advice. This is only entertainment. I'm hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.